a flash event, but it led to a liquidation that was never seen in the 15 years history of Bitcoin. About a third of the market makers went out of business that day. Almost 2 million accounts went to zero.
Yeah.
And it was because of a pricing error, what I would call a glitch. And it led to what they call auto deleveraging.
Tom Lee starts off by recognizing a crucial point. Indeed, even in the first part of the year, he anticipated that the S&P 500 would reach 7,000 far sooner. However, the underlying economic strength was not what caused that time frame to falter. Rather, it was the extreme brutality of the year's unanticipated shocks. There was a significant naked market this year, the biggest tariff increases in American history, several unexpected policy changes, a precipitous drop in stocks that was similar to earlier collapses. Nevertheless, the market accomplished something amazing in spite of these shocks. Every point of its decrease was regained as it recovered. That resilience, in Tom Lee's opinion, is what matters most. It indicates that a foundation solid enough to endure multiple hits was established by investor positioning, liquidity, and earning strength. For more videos like this one, please take a moment to like it, subscribe to the channel, and enable post alerts. You can leave your thoughts and observations in the comments section below, as well as view our other movies on cryptocurrencies and the digital asset industry in general. Everything you do greatly aids in the channel's expansion and assists the YouTube algorithm. Thank you, and have fun with the video.
Yes, we're almost through this year, and I'd say looking back, this was 5 years of history compressed into 1 year, because we had a major bear market, the biggest tariff hikes ever, and that, of course, killed any hope of any 7,000 in the first half. But miraculously, stocks went into a waterfall decline and recovered every single point of that decline symmetrically. So it really speaks to the resilience. But I guess as we're thinking about next year, I bet you it's going to be very similar in the sense that we'll get a policy shock, maybe whether it's monetary or from the administration, it could lead to a big drawdown of 20% again.
Yeah.
But it's a replay of this year. And maybe we've now had 20% bear markets in 5 years. That's a lot of history compressed into a 5-year period. So crypto had been a leading indicator for actually most of the last 5 years. But on October 10th, crypto had what I would call Armageddon, a flash event, but it led to a liquidation that was never seen in the 15 years history of Bitcoin. About a third of the market makers went out of business that day. Almost 2 million accounts went to zero.
Yeah.
And it was because of a pricing error, what I would call a glitch. And it led to what they call auto deleveraging.
Definitely made that.
In a way, it means crypto represents really a very precise measurement of risk appetite, because there's so much more leverage, and that got wiped out.
Right.
That last time it happened in 2022, it took 8 weeks before people sort of touch their toes back in. I think that's where we are. We're near a bottom, but now I don't think crypto leads. Crypto is lagging because it's really the AI that's going to be leading. Still very likely that Bitcoin's going to be above 100,000 before year end, and maybe even above to a new high. So Bitcoin makes its moves in 10 days and every year. I think some of those best days are still going to happen.
Pompliano, in this conversation, we talk about Bitcoin, the price crashing, whether the bear market is here, and what you can do in your portfolio. And I get a little personal. I explain how I invest, how I think about buying and selling assets, and also how I think about portfolio construction and why there's a difference between the gambling table and the long-term lounge. You know where you'll find me. All that and much more in this conversation with John Pompliano. Streets, $89,000 last night. People are very worried, rightfully so. There's a lot to unpack, but first we got to just say sentiment is horrible. It's atrocious. It's never been this bad. You can go and you can look at hacks. You can look at what happened in 2020 on March 12th. You can look at FTX collapsing, all that stuff. That was all bad. I actually think sentiment right now may be worse. People were so bulled up. We're headed up. Remember, all those things happened when there was obvious catalyst. 2020, there's a pandemic. Everyone goes sit at home. You're getting locked in your house. Fearful, but you at least knew why. FTX, we'd gone down all of 2022, and then we had the final puke. FTX failed, right? All the chaos, etc. Here, the difference where unhappiness lives is the difference between expectations and reality. And the expectation was we're going higher. We're going to 150, 200, 250, 300, a million. People are saying crazy numbers. And instead what we got is we touched 126 on October 6th, and bam, we went down 30% from there. And because everyone was bulled up, everyone was excited, that liquidation, all that leverage, that was excitement, that was enthusiasm, that was euphoria. This was right in our face. Now, second thing is, I forget who showed this, but I saw online. We can look at the last two 30% drawdowns. One took like 170 days. Another one took like 72 days. This one took like 44. So all of a sudden, we're getting compression. It's happening faster and faster. We're getting these drawdowns at 30% during this cycle. What does that mean? If you go down 30% in 40 days, obviously fear is going to take hold. And then it becomes this reflexive cycle. You're fearful, I'm fearful, they're fearful. Oh no, sell, sell, sell. People start selling, price goes down faster. You're more fearful, I'm more fearful, etc. So that's first. Sentiment is atrocious. It's in the toilet. Throw it out. Second, whales are selling, man. Now, whales could be OGs, could be people who've held Bitcoin for a long time, or they could just be people who bought Bitcoin recently. But people with large stacks, they had been selling. Now, one of the most interesting stats is
Tom Lee's understanding of the Federal Reserve is arguably the most significant aspect of his research. The Fed has historically relied heavily on consensus. However, Lee claims that the organization is currently engaged in a full-fledged intellectual civil war. Members are advocating for tougher cuts, further rate increases, and a halt. There is public division within the Fed. Powell, however, doesn't say anything. Tom Lee compares the internal voting dynamic to Congress while remaining strategically mute. Votes are counted behind the scenes prior to a policy decision. You only bring it to the public floor when you are certain that you have the majority.
Short-term profit or loss. If you look at coins that are on chain, you can see how long does someone hold them for. Short-term is usually determined at 155 days, right? 155 days. So if you acquired something last 155 days, a coin that you acquired, 95% or more of those coins in the red, underwater, losing money. That's really bad for sentiment. All those people who are buying in the last 155 days, they're all underwater. Short-term loss, not good. On top of that, we do have older coins that are at least switching hands or moving. Now, does it mean that people are selling? Not always. They could just be moving it to a different wallet. They can move it to a different custodian. They could be upgrading the wallet, all kinds of stuff that could be happening. But we know they're moving, and a lot of times that is for selling. And so as people see that distribution happening, they say, hey, the OGs, they're getting out. Now, market is finally liquid enough. There's finally regulatory clarity. There's finally things where they can go and they can take that money, they can put it into a bank, etc. So like, there's a lot of reasons why people are starting to do this. But here's the thing. Here's the good news. Bitcoin fell 30%. You know what it did? Chef's kiss right off of the CME gap. That usually is a pretty good, sturdy little floor there. That's interesting. Second thing, those whales, those big bad whales, hit 89,000. You know what they did? Let me come back for some more. They started gobbling up Bitcoin. Huge spike in the number of whales that started buying in the last 48 hours. Again, doesn't mean that we can't go lower. Just means that the whales are back, baby. All of a sudden they say, wait a second, there's a price that I finally think is too cheap. Right? If you think of an asset, the way finance works is there's an asset. If it appreciates a lot in value, eventually it reaches such a crazy level valuation-wise that it is so overvalued that some people say, no more, no mas, no mas, no mas. We have the white flag. Can't buy it at that level, right? Same thing happens on the other side. It crashes. I'd say everyone, would you buy Bitcoin at $1? Yeah. Okay, would you buy it at 10, 100, 1,000, 10,000, 50,000? There's some level where you're like, yo, this is stupid. I gotta buy it. For the whales, it looks like just under 90,000, bam, they're back in the market. So let's see what happens. But the big question, is this time different? Is the 4-year cycle over? There's people who I really respect, I think are very smart. They're saying, hey, no, it's not. October was the top. We're down only now. We're going to 60 or 70,000. Great. There's people I know who really respect who say, this is a head fake. All of a sudden, we're going to come ripping right back. When we come back, people are going to realize the 4-year cycle was dumb. Doesn't really exist. It got broke when Wall Street showed up, and now we're just going to keep grinding up. That could be true too. Maybe both are true. Here's a little scenario for you. There's a guy on Twitter who I saw he was talking about hit 126, dropped 30%. 30% is a normal drawdown in a bull market. Dropped 30%. Chef's kiss right off of that CME gap. Whale step back in, go right back over 100K. Everyone goes, hey, that was just a little cleansing. We're ready to rock and roll, go higher. But then Bitcoin says, just kidding. I'm really going to a bear market. We go to 60 or 70. I have no clue. I have no clue what's going to happen. What I know is that the Bitcoin that I'm holding, my goal is to give that to my grandchildren. There have been times in the past where, unfortunately, I've had to sell some to buy or to pay taxes or do something, right, where I literally had to do it. Every time I've ever sold Bitcoin throughout the decade or so that I've been doing this, it's like you're doing it and you're just like, this is so dumb. I know I'm going to regret this. But you get life, man. And I think that's what a lot of the OGs are starting to see is like, yo, man, like, okay, cool. If you got $1 billion of Bitcoin, but you live in a studio apartment and don't have a car, I'm not saying that's what they're doing, right? But for an illustrative effect, you think maybe if you take $5 million, $10 million, $100 million, and you get a cool spot, quality of life, right? So we're going to see what happens, but everyone just chill out. Here's a good piece of advice for you. Long-term investors should not take advice from short-term speculators. Bar. Put that on your wall. If you're a long-term investor, stop worrying about what the short-term speculators are saying. And if you're a short-term speculator, stop worrying what the long-term investors are saying. You're playing two different games.
The market's odds of a December cut plummeted from 95% to 40% before returning to a staggering 70%. Powell is allowing the governors to argue in public, but Tom Lee thinks we will receive a cut since the evidence supports it. In the event that the cut occurs, confidence ought to restore rapidly. Considering stabilizing stocks and Bitcoin, Tom Lee's parting message is unambiguous. He thinks we are still in a global risk-on bull market despite the sharp declines, the shock of the cryptocurrency liquidation, and the chaos at the Federal Reserve. Capital will shift back into stocks, cryptocurrencies, and other risky assets as soon as rate reductions start and policy stabilizes. We are probably past the worst of the panic surrender. That concludes our in-depth analysis of Tom Lee's most recent market insights, a remarkable examination of institutional psychology, sentiment extremes, volatility cycles, and the internal conflict influencing the Federal Reserve.